Hello, everyone, and welcome back to the channel. Shorting breakdown. Wow. We talked about a couple of things on Moderna, a couple of numbers. We didn't do a video Friday, so it's going to be a little longer, but we'll see. Maybe not. A lot of interesting things that we talked about actually come to fruition. So if I'm going to go back to those videos. There are two videos, two scenarios that we talked about. So let's go watch that. All right. Pattern. So we had that quick up move the first 30 minutes of the day, and then we just ate time off the clock in a chop shop formation. And because we came up so fast, tomorrow we may break down, right, and test this area. And if we just open up and we open up below here and we go straight down, right, this is a new, right? So this is definitely a buy. And then this general zone here will also be a buy. So as you can see, there was the 445 price target. Once it came there hard and fast, first time it was a buy. And we'll take a look at that chart. The chart, and also I said, if we get past the trend line like it happened just last week, it's going to be bad news for the bulls, which means good news for the bear. And we just had a total breakdown there. I've been saying this for some time. We're in this range, this choppity chop range, going up and down, a lot of volatility, which is great for making day trades and making money in the stock market every day. Before we get into the charts, remember, this is not financial advice. I do these videos for educational and entertainment purposes. Hopefully you learn something in here and you get value. So let's jump into the charts, shall we? And here we have a Moderna on the docket. So let's start with Friday. And we talked about this. This was one scenario. Let's just recap the two scenarios that we talked about, which was if we opened up here, we would wait for some selling, right? And then we would short it. The second scenario is if we came down into this price here, right, in this particular exact spot, if we came down here, we would buy. And if you did that, then you had your 1%. So it went from 446 to that's $6. You had your 1%. And if you're a savvy trader and you've been following our fundamentals, this was a great shorting area, right? It didn't fill the gap completely. It came close, but you need to pay attention to these things because this is great and easy risk management. We didn't take that trade, but I'm just pointing that out to you because the more you see it, the more it will be easier for you to execute it when it does come on your screen. So you have, you would have had 452 to 458. That's $6, 1.5% ish. That is a great risk reward, right? So when we start closing above this candle here on a 15-minute, half hour, 1 hour type close, you would have just got out. And that would have been, where you're wrong. You need to be humble. Sometimes you're wrong in the market. But if you have a good setup, a good fundamental framework, that is also risk management because you're taking trades that are in your favor. And the reason why this trade worked was one, it came into support hard and fast. It just gapped down there. So that was a buy. But you had to sell at the 1%. We always say when there's a $4 gain, you have to take money off the table. That's just what we do. When we short, we take it all off the table, right? When you're long, maybe you want to hold some because it is, on a bullish trend. Now, the second thing that we talked about was once it got on the other side of this line, if we had gap down here, that would be bad news for the bulls. And we didn't gap down there, but we traded down there, right? We traded down here, we ate time off the clock. You can call this a bull flag. You can call this a pennant, whatever you wish. But it's a continuation pattern to the downside. And that's what happened all day. It just kept trading lower and lower. We did talk about that. And then we have Monday, which is today. And you had a breakdown candle. And as I said, you can immediately short it after the close of the first 15-minute breakdown candle. That's when we like to short the break. It's easier to short breakdown candle because I find there's faster and harder momentum. Breakup candles don't have as much momentum and they don't move as fast or as quickly as a breakdown candle. That's just from experience. And there you have it here. You have your probably more than $1. So you have 4.18 all the way to 4. So that's $8. You had a lot of time here to sell your 1%, your $4 and get out. You had a second opportunity if you missed it, right? You had a second opportunity to do the same trade again. And now what we have is, just this choppy down movement and then a flat. We just flatten out here at about 408, 409. So we're in that bearish mode now. So what are some things that could shake up? We talked about what happened Friday. We're talking about what happened today on Monday now, and how we got here. So now let's talk about where we're going. And now these lines are not of any use anymore. So we like to see like what sticks out, on the chart for us to examine and keep our eyes on as a bullseye. So we always talk about breakdown candles, right? So this is a breakdown candle high, 430 on the button, right? 430 on a button, whole number, perfect. Let's try to get this at that price. Yeah, oh, there we go, 430. That is an area where we could, if we come up hard and fast in this area at some point, not if we're just trading like this and then we come up here. No. Like if we would have to, at some point make a move here, and then maybe we gap up and then we come in here. That would be the short, right? And that would be our risk management, was if we end up closing above here on a 15-minute hourly close. But we have to get there quick and fast to get that short, to get that $4 move, which is 430 to 425. That would be your trade that you're looking for. So in the meantime, as we're waiting for it to get there, how could it get there? Well, if tomorrow we have a gap up, if we gap up here at 417 or maybe 413, right? If we gap up in this area and we sell off here, first thing in the morning, in the first 15 minutes, 15 minutes, we have to open higher and come into here and buy, because this is a great risk reward. Okay, we here you have 407, so that's about $2 to $3 of risk. If we close below here, on a 15-minute, 30-minute, 1-hour basis, then we close our position, right? So that's the higher open, closing the gap, buying it at the previous day close price ish, right? It's always general zones. And then our limit is, closing below this area. If we blow it right through it and we continue on this bearish sell-off, so it would be, we have to be wrong at some point, but not 80% of the time, this is, you're going to get a good trade, right? You're going to get a bounce to maybe from 409 to 413. That's $4, right? And because we're bullish on the stock, maybe you hold it, right, for the day, and you just set a stop loss at 409 in the system, and it's an emotionless trade. You made your 1%. You have maybe, a few more shares to ride it through the day, maybe catch another $5, $8, $10, who knows? But that's how you would do it. Now, the bearish scenario is obviously a gap down, and we retest here like this. We come back into this area, and then that would be the short. This is a little bit trickier because here, like, there's no really guide. There's not a guide here to tell me where I should cut my losses. So a little tricky. Obviously, if we end up closing probably up in this area for some time, on a 30-minute, 1-hour chart, you'd want to close out your position. You don't really want to risk more than 1% to 1.5%, but that's the other setup that we have. Let's see. Let's zoom out. Let's put it on a daily chart. Maybe there's some things, that we can see further back. So yeah, so now it's looking bearish, actually. Yes, there's more weight on the bears. I was saying that, we're probably going to test new highs, but we have, a test high here, a lower high, and we're breaking down this level here, and there's just that lower wick here. So closing definitely below 406. We're going to be watching that level, 406, 50, 405 in that general zone. We start closing below that. Again, we're going to be looking at testing this 493. 493, the first touch at 493, take note of this. First touch at 493, probably a buy. You can get a bounce there, right? It's going to bounce $4 or $5, $6 once it first hits the 493 zone. But for now, we may see another down day tomorrow or another up day, right? So depending on the setups that we're going to see. So maybe let's take a look at a 2-hour chart. Can we see anything different here? That looks about right. So yes, I identified these two tops, but you can see that this is why we're saying this area is important, because there was resistance in the past. So again, if we start closing below this line, it is trouble for the bears, for the bulls, and we're looking to test 493. So we'll see. Hopefully we can get the gap up, fill the gap to the closing price. We can buy at support. Great risk management, and then we can rip and test back the 430. That would be the best trade. So we gap up a little higher, we come run a test, and then we test the breakdown candle area. And from there, whatever, we could continue downwards, but that would be the best scenario is for us in terms of a trading setup. And then again, a total failure, maybe we gap down here, we come and test this now, which was support, now resistance, and then we move down here to 393, and this is where is also a buy area. Now, if the price comes into these areas in the afternoon, it's not good. You want early in the morning, the better, because you have the time to trade, right? So the gap and trading fundamentals, you can subscribe to my Patreon. We could talk about it a little more. There's some in-depth details that we can go into so you understand all of the different setups, the scenarios, why time is important, the patterns, the risk management, how you manage all that stuff. So hopefully you learned something. Please comment below. I like having conversations with you. It's a lot of fun, and we'll see you tomorrow.